Hey Swing Trading family, this is Super Swing Trader. I hope you are doing well. Today we're going to take a look at some charts and see where we can identify supply and demand zones and trade it for income. Before I do, if you're new to this channel, here I talk about swing trading using the rules of supply and demand and technical analysis to trade with the big banks, hedge fund managers, and professional traders, and not against them. If that's something you're interested in, please make sure to hit the subscribe button and turn on the bell notification so you can be notified whenever I release a new video. Also, drop a comment below. Let me know, have you guys placed any trades and have you made any money with swing trading using supply and demand yet? Comment below yes if you have and no if you haven't. I really appreciate your comments because it helps me tailor my content to best serve you. Apart from that, let's get right to evaluating the charts. Okay, today we're going to revisit a chart that I previously analyzed, a forex pair. I previously uploaded a video analysis on Euro New Zealand dollar, and now I'm going to revisit it because this has changed significantly from the last time that I analyzed it. But before I start, I get a lot of questions about my charting software. The charting software I use is called TradingView. It is a web-based charting platform. So that means that you can access your charts anywhere in the world as long as you have an internet connection. You don't have to install any third-party programs or browser extensions to access your charts. If you upgrade to the Pro features, you can have pretty cool features like splitting your charts into 2 or more charts at the same time, like what I have here. I have 3 charts at a time. That way you can do your top-down analysis faster and go through more forex and stock charts faster, saving time on switching through monthly, weekly, and daily charts. If you're interested, the link is in the description below. Okay, so let's start on the monthly. Let's start on the monthly. So we can see that there's a supply zone here and price is going to reach it, but before that it dropped and then it found some support or demand. Might be this demand zone here. This demand zone. This demand zone here. So, and also, so it formed this bullish engulfing candle over this red bar, and then it rallied. It also found on the weekly, it also found support on this EMA line, so it almost touched this and then it rallied. It fell short of retracing to this demand zone that we looked at. It's just too bullish, it's not going to retrace to it, so it just rallied. But we don't want to chase it. We want to wait until price retraces to our zone. We don't want to chase it because if we do, then we're going to have losses because of the rules that we use. It's very specific. We don't want to chase anything. We want to wait until price retraces to our zone and then we buy. That way you minimize all your risk and you know exactly where your entry is and where your target is. And so this is what's going on the weekly. It fell short of our demand zone, almost touched this EMA line, and then it rallied, forming this bullish engulfing green candle here. Okay, on the daily, we see that this is where we previously wanted to go long and price almost retraced to it. Even if you took this whole level, price fell short of it and it rallied. But then the good thing is it created a new demand zone right here, so we can draw that. It's pretty wide. You can draw like this or you can draw just using this candle. So if price retraces to here, we're very interested in going long. But just keep in mind that on the weekly, there's a supply zone overhead, very strong. The base is not that good, but it's very strong. Created this strong move, and then price didn't even hit it, and it already came down, but if price does go into this area on the weekly, then it could be it could be pretty strong selling pressure. So but there's a little bit more room to go, and you can see even on the monthly there's a little bit more room to go. So if this drops and this drops into this zone on the daily, we can think about going long, only if and only if it creates more time. Like for example, if price, let me zoom this out more so we can see. Okay, so if price does like this, go down, then go down, and then touches it, and then it can go up. If it just goes down, then it might not go down, it might just go break through it, just because we want to see extended buying pressure. We don't want to see just this short impulse and then a drop down. We want this to go up and down, you know, showing that it can hold these prices, and then after 1 or 2 weeks, if it still continues goes up, and then if it drops down, we buy, but only if it goes down and it gives us enough time to buy it. But then it could go up and then down and then create a new demand zone, and then these zones would no longer be high odds that we will be buying the new zones that it's creating. And that is the updated analysis on Euro New Zealand. Thank you very much for watching this video. Please remember to give it a thumbs up if you enjoyed it. Leave a comment below. I'd love to hear from you. And if you're not already subscribed, please click the subscribe button and also click that little bell icon. Then that way you'll get notified of the next video that I publish. Thanks again for watching.